if you look at the income statement of a senior living property, right? Let's call it assisted living.
Mm-hmm.
You're gonna see aspects that look very similar to the income statement of a multifamily apartment complex, revenue expenses. But
Mm-hmm.
you'll also see aspects, another income statement in there that looks a lot like a home, like a per private care, home health business, right?
Mm-hmm.
Caregivers and labor expense, revenue and expense there.
Okay.
And then you'll see a third one, which looks a lot like a Chili's restaurant, right? There's food and expenses related to servers, cooks, and everything like that.
Mm-hmm.
So you're really taking three different businesses and jamming it together into one.
Are you looking to achieve massive success in your life without dealing with costly investment nightmares? If yes, then this is the podcast for you. Here, we provide engineers and busy professionals all the secrets and strategies to create multiple streams of income, build generational wealth, and live a meaningful life by design. Here's your host, Ted Patel.
Welcome back, Decoding Cashflow listeners. Our today's guest is Adam Benton. He's a founder of Stellar Living Senior Living, which owns senior living communities with over 4,000 beds and has more than 2,500 employees across 9 different states. He was recognized nationally by Argentum, which is a leading industry association, with a 40 under 40 award for leadership. He has an MBA from Columbia University and has spent 5 years in finance on Wall Street before co-founding Stellar Senior Living in 2011 with his family. And today we'll try to cover everything that you might need to know about investing in senior living facilities, from the potential return on investments to the benefit of investing in these type of real estate. So Adam, thanks a lot for taking out time and being on the show. How are you doing today?
Doing good. Thanks, Ted. Thanks for having me today. I'm excited to be here.
All right, great. Yeah, it's pretty interesting. This is a niche that I always wanted to talk about
Sure.
within this commercial real estate market, and maybe we'll just deep dive into your specific niche after you have given us, our listeners, some background on how you got started in senior living facilities. What did you do before that, and what is your current focus on? So
Yeah,
if you can
you bet. So it would be probably helpful. I'll take a moment. I'll tell just briefly about senior living and just some high level stuff about the industry, and then I could talk about how we got started. So, senior living, obviously, the easiest way I like to think about it is to think about the spectrum between somebody's house and a hospital, and that you have additional levels of care along the way towards a hospital. And for a long time, the only real option between a home and a hospital was skilled nursing. But over the years, in the last 35 to 40 years, there's actually been a fair amount of additional types of products and offerings in terms of care for seniors between a house and skilled nursing. So that's where 55 plus retirement home comes in, our communities. You have age restricted communities that can go into independent living, which means you're offering, food, activities, maybe some transportation. Assisted living, where you layer on some care. Memory care, where it might be something where you're helping with dementia residents and most likely in a locked setting. So there's, over the years, there's been a lot more stratification in the types of services offered. And those are mainly paid privately by the people who live there or by their families. So that's the industry as a whole. We mainly operate in the independent living, assisted living, and memory care portion of that. So all private pay. We got started. So my father was attorney, came in to be general counsel of a company that was operating skilled nursing facilities, and then ended up running a large company that was doing assisted living. And then when I was living in New York, after working on Wall Street and finishing up my MBA, we discussed maybe starting our own business doing this. And so we actually, this might be interesting to the listeners, that we started it with no money. So we found 4 properties to purchase. They were all assisted living. And then we, since we didn't have any money to buy into it, we actually partnered with a large real estate investment trust, a REIT, and they bought it and then turned it around and leased it back to us, right? But the lease payment equaled the cash flow. So there was no cash flow beyond the lease payment. So it was our job to come in every day and operate it and make it better. So it was a great way to start. You know, obviously my father had a lot of experience in the space. So the real estate investment trust was willing to take a flyer on us. But as far as just actually operating our own business, we had to start that from scratch. So that was 12 years ago. From there, we've just continued to grow. We were able to improve the operations enough to have some cash flow above the lease payment. That additional cash flow we then use to grow the business by buying and partnering with other groups to buy additional properties. So today we have 34 locations in these 9 different states. We're and they average about 130 to 150 units. We're based out of Salt Lake City. You know, we're a top 40 or 50 provider of assisted living in the country. And we continue to grow. Our goal is to just continue to add on in a sustainable way to the growth of our business. So love to talk about senior living. Happy to talk about maybe different ways in which you can enter or invest or learn more about the industry. But yeah, that's how we got started.
All right, sounds great, man. That's a very smooth transition. Looks like, you know.
Yeah.
Because
I mean,
you had your family who had the background in senior living. That's what made it a little easier, maybe initially. Right. But of course, it doesn't. Even if it sounds like there's a lot of hard work that goes into it.
Yeah, I mean, we had to. I mean, a lot of times people, what I've learned since then and knowing what I know now, I don't think I would have started by like immediately managing properties. It's just, there's a lot of work there. We'd get calls every day saying, hey, do you have a form for this? Or what do you do about that? And, hey, give me like 30 minutes. And I turn around and Google it and then like maybe make a form and send it back over. So there was a lot of that going on in the early days. We were just in a rented Regis office center, right? So there's only a handful of us that started it together. And then obviously we've since grown. We've got, you know, we're actually pushing around 3,000 employees today. And so it's been just a consistent kind of continuous improvement and growth of the business.
That's great.
Yeah.
Well, that's great. And the first, when you mentioned you had four properties initially, right?
Right.
How did you find those properties in the beginning?
Yeah, so I did that.
Let me add one more thing to that question.
Yeah,
how did you find, and what was the criteria to find a property?
So I'll tell you exactly what I did. It's so on Wall Street, I was doing this type of work where I was helping build a large financial fintech solution. So I got really good at basically cold calling groups like large investment banks on the East Coast and in Europe. So I took that knowledge and I just pulled a list of the top 100 owners of senior living. And then I went through and found all of their contact information. And then I targeted areas in terms of size and location. I was looking for properties in the Pacific Northwest and in the Rocky Mountain region. So I identified all of those owners, and then I would just email, call, leave a voicemail, follow up, call. And I used a CRM called Zoho, just a free CRM, you know, client relationship, customer relationship management software. And I just continued to cold call and meet with people until something came out of that. And we found 4 properties that way. So it wasn't like today we have a nice relationship of brokers and groups that will send us stuff. But back then I was just cold calling people. That's how I did it. Yeah.
All right. Love it, man. It's yeah. And what are your underwriting criteria as of now?
So yeah, so it's a good question. So senior living, people will know somebody who maybe owns a property that has 6 beds and it's a house and you have people living there. And then they get all the way up to there's properties like Erickson Senior Living that owns properties that have 1,000 or 2,000 units on a single campus. So our investment criteria is we like things that are over 100 units that are in metro areas, so highly populated areas, at least 100,000 people or more, that are predominantly private pay. So sometimes people pay, the government might pay through Medicaid or Medicare. We're actually a private pay solution, so it's out of your own pocket. So that's a third criteria. And then we've targeted independent living, assisted living, and memory care. And then the last one, which is specific to us, is that we want to be able to fly directly from Salt Lake to that location, there and back in the same day. So that limits our ability to be this national operator, but to really focus on like a strong regional presence. That's it from that's our first 5 criteria. When we see a broker send us an offering memorandum of something for sale, we'll quickly go through those 5 and just say 100 units or greater, metro area, can we fly in and out in the same day? Is this the product we typically operate? Independent living and assisted living, and is it private pay? Hits all 5. All right, let's underwrite it. But I don't know if that answers your question, but those are our first initial kind of like before we even start spending any time on it. And then after that, there's your standard hurdles for your IRRs and your debt service coverage ratios and stuff like that.
So one thing you mentioned is private pay. I would be more interested, like, I've seen the senior living facilities where government, pays some money to the individual.
Right.
Either, as you said, part of Medicare or Medicaid, but why you only focus on private care, not the ones where the government is involved?
Great question. The main reason is because there's there's just an additional level of know-how and expertise to be able to collect properly for government funds. So you have to have an additional billing department and the ability to properly coordinate the billing of that type of care. And so it's just a different business model. Now, what's interesting is we do actually have that department, and we do operate some publicly funded retirement communities, but in general, we like to invest and focus on private pay. The other reason, it's just like anything related to government, it's harder to collect. You typically have the crowd is a little bit sort of more rough and tumble to work with. And so there's some of those aspects that you have to be cognizant of when you operate in a publicly paid care setting. Yeah. And I know this is, there's a huge real estate component to this, but there's also clearly, I'm talking about, there's a big operational component to it. Yeah. So I'm happy to deep dive on the real estate portion as well, whatever makes sense. So on that.
Let's take a dive in the real estate section first, right? If you can tell us, in general, if you can tell our listeners, when you're looking for any community, a single bed, if you want to put a price on a community, let's say 100 bed community, what would be the price per bed on an average in the locations that you are looking?
So as you can imagine, it's just like saying like, hey, what's going to be the price per unit in an apartment complex? That will vary, but there are some general rules. So newly built, if you and I were going to go and build an assisted living today, it'll be above 300,000 a unit to build one. And the unique differences are they're going to be smaller units, but much larger common space. So big percentage of common spaces as opposed to the units. And you'll have a mix of studios, 1 and 2 bedrooms. You won't get anything larger than a 2. Majority, probably 60%, are going to be 1 bedrooms. It will drop down based on age and its ability to create basically cash flow. So at that point, the value of a property will increase or drop based on its cash flow ability, and you apply a cap rate to it. Today, with interest rates spiking, in general, and assisted living is going to trade between a 7 and an 8 cap rate. And then it will always be higher than apartments by about, I would call it, at 200 basis points at a minimum. So if an apartment is trading at a 5% cap rate, you're going to be sitting at least a 7% cap rate when you go to value a property. So if something is in real dire straits and it's not doing well, you can pick them up for 80 to 100,000 a unit. And if it's doing incredibly well, you'll see them trade in that kind of 450 to 500,000 a unit. But we tend to buy stuff, if it's 100 units, we're targeting something that's between 200 and 250,000 a unit. So there's your range: 100,000 a unit all the way up to 500,000 a unit, 300,000 a unit to build, and depending on how it operates, it will swing higher or lower from there.
Yeah, and depends on which area it is, right?
Totally.
If it is a major metro, then it will be higher. If it is somewhere suburb, it might be a little less, of course.
That's correct.
Yeah. And when you said normally the assisted living facility, the cap rate is 200 basis point higher normally, right, than the multifamily communities. What do you think the reason is? What's the main reason behind that gap?
Oh, it's just higher risk. So it's you're really just buying a stream of cash flow, and multifamily. It's just a much more stable stream of cash flow. And so when you layer on the complexities, where if you look at the income statement of a senior living property, right, let's call it assisted living, you're gonna see aspects that look very similar to the income statement of a multifamily apartment complex: revenue, expenses. But you'll also see aspects, another income statement in there that looks a lot like a home, like a private care, home health business, right? Caregivers and labor expense, revenue and expense there. And then you'll see a third one, which looks a lot like a Chili's restaurant, right? There's food and expenses related to servers, cooks, and everything like that. So you're really taking 3 different businesses and jamming it together into one. And those businesses have different risk factors to them. And so that additional risk is what creates the 200 basis point spread on top of the multifamily cap rate, if that makes sense.
Yep, absolutely makes sense. And what are the other facilities you provide in here? Like for example, you have the full nursing staff also in these facilities. Do you have doctor visits, everything coming up?
Good question. So when you move into a standard private pay assisted living, the resident or the tenant that moves in, they expect to get a place to live. So that's your rent portion, but also utilities paid for. That's included in rent, whereas a lot of times multifamily is not. And then you layer on transportation. So there's usually a shuttle bus and a car service there. And then after that, activities. So you usually have like an activities person that has a calendar of daily activities that are happening. And then on top of that, food. So full 3-day room and board. So that is breakfast, lunch, and dinner with servers that do dining service. And so that's independently. And then on top of that, if you need care services, now we're talking personal care, not medical care. So things like grooming, bathing, escorting, help with meals, help with medication management, that's considered personal care services. That's where assisted living shines. And so that's layered in. So that's usually going to be certified nursing assistants, CNAs, med techs, and then nurses, so RNs. And you stop there. You're probably not going to see doctors in an assisted living, but that's the whole stack of services that you're provided when you pay your monthly rent.
And do the individuals have a option to choose from these service, or they are mandated to have everything?
It's usually not a la carte, and that's actually a good question. It's an all or nothing thing. So the assisted living generally just staffs as if they're going to provide it every time. It would get a little too challenging if you have kind of pick and choose in terms of the ability to staff that properly, supply it properly, and then manage just the billing. So Oftentimes it's just an all-inclusive fee that you pay once. Yeah.
Okay. And what's an average, fees or rent, whatever you call, for these facilities?
They vary, but I would just say, just think $5,000 a month is usually, so 60,000 a year. And that's all
For one person?
inclusive.
For one person?
Yeah, for one person. And then usually the second person, if they're sharing a unit, is anywhere from $700 to $1,000 on top of that. So it's not another 5,000. Yeah. It's called a second person fee. Yeah.
That's great. Maybe, we don't have much time. Otherwise, I would like to dive into more breakdowns of income versus expense, how it works, and,
right.
But maybe some other day we can dive down deeper into the numbers, but it looks pretty promising, right? 5,000 per person. But yes, of course, you have to maintain and give all the services that you spoke about, right? So there is a higher operational cost involved, which takes away a significant part of this fees.
Right. And our average age resident is 86 years old. So that's their average age today. And about 10 to 15% come in with a spouse or a significant other. So where they have where you pay that second person occupant fee. And then that $5,000, obviously you can get something less if it's a studio or one bedroom. And then that will go up if you need lots of care. So the thing that is a little different that varies by person is the type of care that they need, which is the operational aspect of it.
And if someone wants to get started into the similar business, what are the first basic steps they need to take? Yeah,
I think the very, very first thing that you'd want to do is go just set up a tour and tour one of the properties and just see, like, is this for me? If I wanted to start investing time, money, or resources into this industry, it'd just be to spend a little bit of time taking a tour, and you can just call and say, I'd love to take a tour. You'd be with one of the salespeople, and they tour you around. That's probably the very, very first step. Like, see if you like it at all. And then after that, in terms of exposure from an investment standpoint, there are lots of ways in which you can enter. Obviously, you can enter really easily by just buying stocks of REITs that own senior living or companies that operate directly. The second way that you could enter is if you want to, maybe you find one to build or buy where you raise the money to do that, and or get a finder's fee for that. Now, if you do that, you probably want to hire a third-party operator to operate the property for you. I would highly recommend that and not do it on your own. It's a whole nother animal to actually operate it. But you could, in essence, find a property. Like if you're already out there buying or investing in multifamily, you could go and buy and invest in senior living and just bring in an operator to operate it for you. But I would recommend in that case to have, before you buy it, to have the operators kick the tires on the operations and give you feedback on what a budget or pro forma might look like for that property. That's kind of an extreme example of entering, but yeah, those are a few different things I would recommend.
Okay. And what about the funding part of it? Like how do bank work with you, or maybe the other investors work with you?
Yeah. So if you look at the capital stack on the debt side, there's a conference every year. It's called the NIC. It's twice a year. That's where most of the funders go that do debt funding. And you can look that up. It's usually in Chicago and San Diego, back and forth. But you can also find the list of people who provide services there. There are many people willing to lend into senior housing. But if you just call your local bank, you're going to find that it's a little too complicated for just like usually you have a specialized team within a bank that actually does the lending platform specific to senior housing. On the equity side, you can raise through friends and family, or you could partner with a group that invests specifically in senior housing. There are many of those groups as well, large funds that focus specifically on senior housing. I've noticed that when people first get started, it's usually a friends and family raise.
Yeah.
Or you partner with an operator. Maybe you find it property and you put it under contract, and then you bring in the operator and see if they'd be willing to invest. That's another good way to get a good alignment and partnership.
Does SBA fund these kind of properties or no? SBA loans?
Yeah, they do. I wouldn't recommend it. It doesn't. You start running in. So the short answer is yes, but property is probably a little smaller than what the SBA can handle. HUD funds these types of properties, but then lots of private funding options as well.
Okay, and the interest rate is almost similar to multifamily, or it varies?
It'll be higher.
It'll be higher.
The leverage will be lower, and the interest rate will be a little higher, and that'll match alongside. That actually is another reason why that pushes up that cap rate by 200 basis points. Not a ton higher, but definitely marginally higher than what you'd see in a multifamily capital stack. Yeah.
And okay, and in all your facilities, right, around Nile State, you have hired a third-party operator to manage the facilities, or you have in-house?
That's in-house. That's in-house. What I would do is when you start, I would hire out the third-party operator, and then if you're interested in doing it, you could bring it all in-house. But it's next level. That's where all the employees are, and it would be similar to investing in a hotel and then all of a sudden becoming a hotel operator, or investing in multifamily and then deciding to do the management yourself. But it's on another level when it comes to managing senior living. It's just, there's a lot to do. Yeah.
Once you gain some experience owning a couple of them, 2, 3, then you can think about, let's build an in-house team.
Yeah.
And get started.
Yep.
Yeah.
There are plenty of groups and funds that don't ever operate their own stuff. They just buy and invest, and then they work with third-party operators because it's so different. And then there are groups like us that'll do both. So but it's you can follow either model and get good exposure and participation in the industry.
Mm-hmm. And do you have any exit strategies, like for 5 years, 10 years? The other thing is, in the multifamily, you do the value add on before you exit out of the property, raise the rent. How does it work in the senior living? Like, how do you increase the value of the property?
Yeah, so we're on a typical 5 to 7 year time horizon where we buy, operate, and sell properties. We tend to continue on with the properties after they're sold with the new buyer and continue to operate it. But as far as value creation strategies, you do all the same things that you would do in multifamily, but then there's like 100 other things that you could potentially levers that you can pull to help create value. And what I mean by that is is because there's so much operational intensity, you can figure out they're paying a little bit too much on food per day, or their staffing ratios aren't quite what they should be, and so, or they're not charging properly for this specific care item that they're offering, and there's so many of those things that you can and nuances that you can actually do a fair amount to improve the operations of a building. And that's how we got started. There's the easy stuff, which is just like you'd buy in an apartment complex, renovate it, and then charge more for the units that you renovate and see what demand is for those. You can do that. But then on top of that, you can start doing additional things on the operational side to continue to create improved margins. Yeah. Yeah. And that's one of the more exciting things about it. But whereas in an apartment, you're really stuck with whatever the market can bear in an area. Whereas in senior living, if you think about it, it's a mix between an apartment, which is location and look and price, and a hospital where you really care more about the quality of care and word of mouth and referrals. And, you're not going to choose a hospital because the exterior looks good. You want to know that the teams inside actually can do a good job. So because of that, you actually have a better opportunity to take assisted livings that are underperforming and improve them, even if they're in a bad location or in a tough market, because of that ability to have it's based on your reputation as well as the look of the building. Yeah.
what are the normal, like in your latest recent deals, right? That, or maybe the recent properties that you bought. What are an average returns? What are the average returns? Like monthly cash flow? Do you do monthly cash flow to the investors? What if you do? What are those, and what is the internal rate of return that they can expect for the period of time?
Yeah. So because the cap rate is higher than multifamily, you'll see returns will generally be targeted as higher. So with that, when we underwrite a deal, we look for right now like an unlevered cash on cash return, all in of around 10%, 11%. And then when you leverage that, that starts moving up, kind of 15 to 20% range. And then if you layer on LP investors and have additional carried interest to promote, you can then push it on even higher than that. So we target 10 to 11% unlevered IRR, and then we 15% plus when it comes to adding leverage and the type of sort of work that we have to do to roll up our sleeves to accomplish the plan, right? So that's it.
All right. And if any investors, right, if they're planning to invest in senior living facilities as a passive investor, what are the things that they need to be aware of, or I would say research before they start investing into these kind of facilities?
I would. So if I'm a passive investor and I have some money to invest in senior living, and receive like a package from a friend or something, or from an acquaintance related to investing in a single asset, I would dive pretty deep into the operator. Who's the person managing the property and what's their track record? That's where you're gonna find the most interesting case studies around what can they do it again. So that's a big one. And then I would also just like our criteria, I'd recommend coming up with some similar criteria. Like I personally wouldn't invest in anything under 100 units, just my own personal thing. But people make money below that. You'll see a lot of packages that'll come across that are 60, 80, 30 units. I wouldn't recommend it. So as a private investor, you make sure it's bigger, and I'd make sure that it's in a larger metro area. I wouldn't invest in like a tertiary market where mainly because of the complexities around hiring, and then the complexities around like how fragile a market would be if there's an additional entrant in the business. Now, so if you're in a city that's got 50,000 population and there's a few providers of assisted living, all it takes is one or two more to disrupt that market. And so it's like investing in a supermarket. There's only so many that can be supported by a city. So bigger cities are better. Yeah.
Okay. All right. No, absolutely. Like as you mentioned, right? Operator, they play a significant role. They are the ones, right, here whom if you have a relationship with prior relationship, if you can trust them, or and if the operator is new, like you haven't known them, then of course, as you mentioned, go through the track record, how long they have been in business, have they gone full cycle on these deals, what are the previous returns they have provided to their investors, and so on.
Right.
Okay. All right. So is there any specific investment or business advice that you would like to give to our listeners?
Yeah, I think for this specific audience, I think ownership in real estate over the long term is always a good thing, in my opinion. And just making sure that it's some level of diversification while you're doing it, and that you're taking appropriate risk. But I would say it's start early and invest often, and you'll be pretty happy with the results over time. Yeah.
Well, that's very true. It's not as I always say, right? It's not a a get rich quick game. It's a long haul. Just keep doing it, and you'll see the results at the end.
Right. That's absolutely true.
Okay, and so we'll get into the final round of questions. Are you ready, Adam?
Sure.
All right. Okay. Which is one book that you will recommend, which has made the most impact in your life, your personal or business?
So from a business standpoint, I really like this book called Traction. If you're looking to start up a business, it basically walks through every step, and it's fairly user friendly. We use it here, and it's good for a startup or teams of maybe 250 people, or between 50 and 250 people. Are you familiar with that book?
Yes, I read it by Gino Wickman.
Yep.
Traction.
It's awesome.
It's a really nice book.
Yeah.
It gives you how to operate, how to scale, what are the things that you need to look out for.
If you have no idea how to do it and you're worried about that piece, just follow the steps in that book and you can start almost any business. That's what I would say. It's pretty good.
Yeah, it's really good. Yeah, that's right. What are the other resources in addition to books that you personally look at throughout your, in your business, like any news, research paper, any particular websites, go to a specific conference related to assisted living? What are your resources?
So there are two main industry associations that are very good with resources. One is called the NIC, which is the National Investor Conference. They have, they're more of the real estate financial side of the business, and lots of white papers and data. We subscribe to them. We probably spend a ton of money each year in terms of data from them. And they have good software. So they have a conference twice a year, good software, great research papers. And then on the operating side of it, not the real estate side, it's a group called Argentum. And Argentum has a conference once a year, but their website has phenomenal information related to the operational piece of it. So regulations, caregivers, different trends that are happening in the industry, that's that side of it. So those two cover both aspects of senior living, the propco side, the property real estate side of it, and the opco side, the operating piece.
Okay.
You jump on both of those websites, you attend a conference or two related to that, you'll be fully entrenched in senior living.
All right, that's a good recommendation. Maybe anyone who wants to start in looking at assisted living, they can visit these associations, register there, and start looking at the information.
That's right.
Yeah.
Okay.
All right. What is the way? Of course, you are in the senior living facility, so I shouldn't be asking you the question, but I'll still ask you. All right. What is the way you like to give back to the world? Because you're already doing it, right? You're already facilitating.
That's a great question. So one great thing about senior living is there's a lot of purpose already involved in just owning and operating. It's very people centered and service oriented industry. We have two additional tools that we've used to help continue to give back, and one is that our company, our Stellar Senior Living, is a benefit LLC. It's not a standard LLC. So that means that we prioritize social impact as well as financial impact in our decisions. So that was a big choice of ours. We call that the double bottom line. So it's not just profitability, but it's also people. And then the second thing is that we have the Stellar Living Foundation, the 501c3 foundation, where we raise charitable donations that we use to give back to our residents, our employees, and the communities in which we serve around us, in terms of medical need or any sort of emergencies, or just helping somebody with a scholarship. And so that's how we've been able to memorialize and formalize our way to give back as we grow.
Love it, man. So many things together.
Right. It all
Yeah.
works together.
It all works together. Exactly. All right. Final question, Adam. How can Decoding Cash Flow listeners get in touch with you?
Yeah, the best way is just to reach out on LinkedIn. So you can find me. It's Adam Benton at Stellar Senior Living. If you look that up, you'll see my name, and it'll just say founder of Stellar Senior Living. I'm active on LinkedIn and would love to chat. So that's the easiest way.
All right. All right, Adam. Thanks a lot for taking out time for the show. It was nice talking to you, and we will stay in touch.
You bet. Thanks, Ted.
All right. Thank you.
Thanks for listening to Decoding Cash Flow, brought to you by Aster Capital. If you found value in this episode, then please share it with someone who you think could benefit from it. And make sure to act on what you've learned. If you want Ted Patel to personally help you reach your goals, then feel free to set up a one-on-one call with him. Also, visit us at astercapital.com for more free resources. Content of this podcast is for informational purposes only. As always, please consult your own advisor before making any investment decisions or setting a course of action. Thanks again for joining us on this episode of Decoding Cash Flow, and we'll catch you in the next episode.